Welcome to this explainer. We're jumping right in today because we are looking at a staggering financial reality that is literally hiding in plain sight. Right now, there are at least 5 legal forms that the average American homeowner over the age of 65 is just sitting on. These are forms that can stop, lower, or permanently freeze the property tax bill they pay every single year. But because nobody is out there telling them these forms exist, millions of honest, careful homeowners are quietly handing over their hard-earned retirement savings to the county. It's an invisible mistake. There's no penalty, no late fee. It's just money leaving your account that never legally had to. Well, we're going to change that today by walking through exactly what these forms are.
So why does this matter so much? Well, let's put things into perspective. The average property tax bill in this country is hovering right around $4,800 a year. If you're a 65-year-old planning to live in your home for another 20 years, that is nearly $100,000 going straight out the door. For many of you, that bill should be a fraction of what you're currently paying. Or, honestly, in some cases, zero. The county doesn't care that your mortgage is completely paid off. They're sending the bill anyway. And hey, if you think this doesn't apply to you because you rent, think again. Your landlord is passing that exact tax directly to you in your monthly rent.
Okay, let's dive into this because we absolutely have to clear up the massive misconceptions keeping both middle-class and low-income homeowners totally complacent. People hear this topic and immediately think, well, I'm a comfortable retiree with a paid-off home, so I definitely make too much money for a tax break. Or on the flip side, they think, I just live on Social Security. I don't have some massive estate. Actually, both are wrong. Homeowners at every single income level are quietly overpaying their property tax bill, just in different ways. And the biggest myth of all is thinking that if you qualify for a break, the county is going to automatically give it to you. They absolutely will not.
State Bar licensed estate attorney Walter Barron really hit the nail on the head with this golden rule. He spent over 15 years representing homeowners, and he points out a pretty brutal truth. Your county tax assessor's office is funded by the taxes they collect. Every single dollar they hand out in exemptions is a dollar their own office doesn't get to spend. So the county is definitely not going to call you up on your 65th birthday to proactively help you keep your money. The law doesn't refund you automatically. You have to know the form exists, and you have to ask for it by name.
Here's our roadmap for this explainer. We're going to cover exactly how to claim this hidden wealth, form by form. From the foundational homestead exemption to senior savings, cash relief, tax deferrals, some hidden bonus moves, and finally, how to take action now. All right, starting us off with Section 1, the foundation, the homestead exemption. Now, this first form is absolutely critical. It acts as the necessary gateway because you actually can't claim almost any other senior benefit on our list until your basic homestead exemption is already on file. And this brilliantly illustrates just how much you can save. A simple one-page form filed before April 30th instantly knocks thousands off your taxable value forever. Basically, almost every state offers this for your primary residence, and it takes a huge chunk of your home's assessed value off the books before the county even calculates your bill. In Florida, it knocks off $50,000. In Texas, it's $100,000 off the school portion. But remember, it's usually not automatic. You file it once, and it stays on file as long as you own the house. Moving right along to Section 2, Senior Savings, the age 65 exemption and assessment freeze. Once you've got that foundational exemption locked in, we step up the escalation for anyone 65 and older. These next 2 forms sit right on top of that basic foundation and can completely change your retirement expenses. Form number 2 is the senior, or age 65 exemption. This is a separate piece of paper you have to explicitly ask for when you turn 65. In Florida, it can mean another $50,000 off. In New York, it can knock up to 50% off your assessed value. And this is where comfortable retirees mistakenly tune out. They assume they make too much money. But get this, more than half the states with a senior exemption, including Texas, Florida, and Georgia, do not have an income test at all. It is based strictly on your age. Then, we get to form number 3, the senior assessment freeze. Now listen closely, because this is arguably the single most valuable form on this entire list. When you turn 65 and file this application, the legal mechanics of it actually lock your property tax bill or assessed value at whatever it was the exact year you applied. From that point forward, no matter how much your neighborhood gentrifies or how much your home appreciates, your tax stays put. Your home's value could literally double, but your tax bill will not go up. Think of it like this. Imagine 2 identical houses in a rapidly gentrifying neighborhood. Both were worth $220,000 when the owners turned 65. Today, those homes are worth $440,000. The neighbor on the left never filed the freeze. They're paying taxes on that full $440,000, tragically punishing themselves financially for their own home's appreciation. But the neighbor on the right? They filed the one-page form. Their tax bill is still calculated on that original $220,000 number.
Same street, same house, wildly different bills. But you have to catch the narrow filing window, usually between January 1st and April 30th, the year you turn 65. Miss it, and you might lose those savings forever. Okay, Section 3, Cash Relief, the circuit breaker. This is easily the quietest form on our list. It's designed specifically as an electrical-style safety switch for working, middle-income retirees. It's called the circuit breaker. The idea is that when your property tax bill rises past a dangerous percentage of your income, usually around 3 to 6% depending on where you live, a breaker kicks in, and the state actually refunds you the excess. You just report your household income and the property tax you paid, and if the tax is eating up too much of your budget, the state cuts you a check. States like Massachusetts, New York, Michigan, and Illinois all offer this. So the crucial point is that this offers real refund checks, not just deductions. And because this is a state income tax form, not a county form, almost no one knows to ask for it. The county's never going to tell you about it because the check comes from the state. Also, keep in mind, this isn't just a poverty program. In Maryland, for example, the income limit is around $60,000. If you're living on Social Security and a small pension, this single page tucked into your state income tax instructions could literally mean a refund of hundreds, if not over $1,000. That brings us to Section 4, the nuclear option, tax deferral. So Form 5 is the ultimate, life-changing solution for millions of seniors who fit a very specific, incredibly stressful profile. House rich, but cash poor. Most states treat this like a closely guarded secret. It's the property tax deferral. If you're over a certain age, usually 62 or 65, and have lived in your home long enough, you can apply to literally stop paying your property tax. The state pays it on your behalf. In exchange, they place a low-interest lien on your home, which is only paid back when you sell, refinance, or pass the home to your heirs. For a senior terrified of having to sell the home they raised their kids in just to pay the county, this is huge. States like Oregon, California, and Texas offer this. Just one quick self-correction here. If you have a mortgage, make sure to check with your lender first. Unpaying property taxes can sometimes trigger a mortgage default, so you definitely want to clear that up beforehand. Shifting into high gear now with Section 5, 3 hidden bonus moves.
We're going to fly through these, but if you have specific assets or circumstances, these rapid-fire bonus moves could save you a fortune. Bonus move 1, the disabled veteran exemption. Depending on your service-connected disability rating, this can wipe out your bill entirely. 100% rating in places like Texas or Florida means 0 property tax for life. Bonus move 2 is absolutely heartbreaking if you miss it. The surviving spouse carryover. When a senior passes away, exemptions do not automatically transfer to the widow or widower. You usually have to reapply within a year. If you don't, a grieving spouse could see their taxes jump by thousands of dollars literally overnight. And finally, bonus move 3, protesting your assessment. You always have the right to protest the county's appraised value by just bringing in 3 lower comparable sales from your neighborhood.
Now, what's really interesting about this slide is the sheer scale of the missed opportunity. Fewer than 5% of homeowners ever bother to protest their appraisal. The county makes these massive assumptions without ever stepping inside your house. And honestly, they're wrong all the time. But of the tiny 5% who actually take 15 minutes to sit in front of a review board, nearly half win massive reductions. It costs $0, requires no lawyer, and can lower your bill for every single year going forward. Finally, Section 6, take action now. All right, we've covered the tools. Now it's time to take control. You are fully equipped to stop the financial bleeding tomorrow, and here is your exact sequence of actions. Step 1, identify your eligible forms from today's list. Step 2, pick up the phone and call your county appraisal or assessor's office. Step 3, boldly ask for the forms by their specific names and file before the deadline. Remember, these forms are just sitting on a shelf. The seniors getting these breaks aren't wealthier. They're just the ones who confidently called and asked for the senior assessment freeze or the homestead exemption by name. To make the whole shebang totally foolproof, you can head over to the resource link provided in the source material. The estate attorney behind this analysis, Walter Barron, put together a free one-page checklist of every form we covered, plus state-by-state filing deadlines and even actual phone scripts you can read word for word when you call your county assessor. So I'll leave you with this final, somewhat provocative question. The county relies on your silence. They rely on the fact that you don't know the rules of the game. Will you let them quietly keep your retirement savings next year? Please, take action. And if you know any homeowner over the age of 65, share this explainer with them. That simple share could literally save them thousands of dollars. Thank you so much for joining me on this explainer, and go take back your money.